federal consumer protection laws and state consumer protection laws don't care if an institution can recover the funds. So all they care about is consumer protection. Two completely different focuses that sometimes can get really confusing for institutions.
Rayleen, thank you for meeting me today. I wanted to talk to you about fraud in the ACH. It just seems like it's just getting crazy. I mean, you and I both been just shy of, I think, 30 years probably, right? And it's just increasing. First, I want to ask you how you an expert in fraud and fraud investigation. Give me a little bit of background. I mean, I know I've known you for 1,000 years, but I'm not sure where you came from.
Ouch. Well, you're aging me. All right. Maybe not 1,000, just 100. So hi, Patty. Thanks for having me back. I appreciate it. So yeah, my name is Rayleen Pirnie, and I started about 27 years ago in fraud investigations. From there, learned a lot about what I really didn't know. So started down a path of exploring areas of risk management and compliance and how that can help in a fraud investigation. And so now I, instead of investigating the frauds on a daily basis, help financial institutions do their investigations and mitigate the fraud risk.
Cool. So we both know that fraud has increased, let's say in the last 10, 20 years. Can you give us some examples of how and why?
You know, the why is a real hard one to try to tackle. I think that dependent on the type of fraud, the explosive use of the internet, particularly COVID, when you think about how many of your more senior family members and neighbors were, on the internet or FaceTiming with family members, et cetera, pre-COVID versus during COVID. COVID kind of forced a lot of people to learn technology as quickly as possible as we were really cut off from those loved ones. That's where we saw this explosion of consumer level data starting to hit the dark net. Whether it was insecure devices that they were using, they sell for scams. We saw sharp increases. I know, Patty, you and I talk about this, where we saw those sharp increases in romance scams. And that hasn't backed down. It still persists today, even though we're no longer under those lockdowns. So I think that the why of it is there's so much potential for fraudsters to utilize information against a consumer or ways to gather consumer level information, from a straight scam to buying information off the dark net. The types of things we see, yeah, it's still increasing in the consumer side. Here in the Midwest where I'm at, since I monitor frauds across the nation, the big thing right now here is people getting phone calls telling them that it's a financial institution representative and that they've violated some code of the institution, and they're being told to put their debit card with the PIN number written on it in their mailbox. And they're doing it. And then somebody's just driving up and taking it out of the mailbox. Getting calls saying that this is law enforcement and you've done something naughty on your computer. We're going to come arrest you if you don't go buy us gift cards. So there's the fear factor, the impersonation. We see that a lot. But of course, we also see the businesses with insecure devices that they get breached. And that gives them access to the ACH network. And I think the one thing to clarify here when we're talking about fraud is it's fraud in the ACH or utilizing ACH. It's not fraud of the network. So the network hasn't been breached. The network hasn't been compromised. It's just being misused.
So you talked about consumer fraud. I'm guessing like business email compromise. Is that what we're seeing? Like the CEO impersonators or vendor? What are the frauds we're seeing with corporate customers? Greg the plumber.
With corporate.
Yeah.
Correct.
Would you agree that's more like the vendor impersonators or CEO Sean emails you and says, this is hush hush. We're merging with another association. I need you to wire this. And it's not really Sean that sends the email. We get a lot of those too. Would you agree? Is there anything else you think that hits the corporate customers more than a consumer?
I don't think that it affects corporates more than consumers. I think there are, in terms of sheer numbers and sheer volume, consumer scams far outweigh corporate scams. The dollar losses per occurrence, however, Absolutely. You could be talking millions of dollars in a corporate business email compromise type of thing, like you mentioned, Patty. You and I both have received emails claiming to be Sean, text messages. Hey, which cell phone are you on?
Mhm.
Okay, well, my boss knows how to find me, right? So we just don't respond. However, some businesses are not aware, and I think education is a real key point in making sure. And it's really, we have seen it, the effectiveness of financial institutions educating particularly their underlying business clients about these types of scams, what to look for, and how to avoid becoming a victim. Mixed results on the consumer education side. I think it depends on the topic.
Well, I always say that I think that while I'm on hold with my credit union or bank, whether I'm a corporate customer or consumer, instead of listening to music, tell me about the most popular scams that are going. Educate me while I'm sitting on hold. So to get back to the consumer stuff for a second, what do you think the most common misconceptions about consumer ACH claims of unauthorized are? What have you heard about? What are
Yeah,
the
that is
things you heard?
probably the number one call I take from financial institutions in a year, specific to ACH frauds, is that if we're following the ACH rules, we've returned everything for the last 60 days. Therefore, we're done.
Mhm.
No, no, you're not. Under federal Regulation E and state consumer protection laws, there may be additional requirements for an institution to investigate and resolve further. So I think one of the biggest misconceptions in that space is, well, if we get our money back, we give the consumer their money back and then we're done. That's not true. Federal consumer protection laws and state consumer protection laws don't care if an institution can recover the funds. So all they care about is consumer protection. Two completely different focuses that sometimes can get really confusing for institutions.
Yeah, I would say that, the 27 years I've been doing this, I think that out of the hotline calls I've gotten over the years, it's high between reclamations and Regulation E, tons of questions. And there's such confusion with, the limitation warranties and where does my liability end for an FI? We always joke, we talk about Reggie doesn't care about the FI getting like shingles doesn't care. You ever see that commercial? But I'm going to ask you a loaded question. What kind of considerations? What do we do to mitigate ACH fraud if we're a bank or credit union? I mean, that's like we could. That's a loaded question. I don't know. What do we do?
Yeah, so this podcast is 3 hours, right? I have 3 hours to address that?
Exactly.
No. Nobody would want to sit through a podcast that long. I agree. It's kind of loaded because it depends. It depends on the fraud. That's why I suggest before trying to jump into even an education program, perform a fraud risk assessment. Actually assess what is the potential for fraud risk at your institution. Going back to my history, small community bank is where I started. We didn't get a lot of call volume. So I don't know that education over instead of hold messages would have been all that effective. But we had pamphlets and brochures and things like that in the branch
Mhm.
because a lot of our small rural community account holders would physically come in to conduct their business. So we had an opportunity at the front line. We only knew that by performing that fraud risk assessment to say our consumers could fall for a scam. What's the most common scams? XYZ. How are we going to mitigate that? To your point, Patty, if you take a high volume of calls on the phone, that would be a great opportunity. Instead of listening to the Muzak nobody wants to listen to, hey, alert, the FBI has said if you can answer yes to any of these three questions, you might be a money mule. Talk to your representative when they pick up the phone. That could be a great opportunity. Online, another great opportunity. LinkedIn, social media, your own website, all different opportunities for you to get the message out to your account holders.
So, yeah, I know that there's a ton of teaching classes like we talk about P2P and A2A, and that is not without risk. I mean, if I literally, honestly had $1 for every time I got a call from an institution, they're the ODFI, they're offering the service, and they've taken losses, I would not be sitting here with you. As much as I adore you, I'd be retired somewhere But we always tell, tier, you don't have to offer to everybody. Like we talk about with businesses, you don't have to offer origination services to everybody. And with the P2P to A to A, Raylene, you've been with your institution 34 years. You've got a couple $100,000 in the bank. You've never bounced a check. We're going to allow her to do X. Patty, on the other hand, she's always in the minus. I think she's accrued $800 in NSF fees. We may not even allow her to do that. So, we have to be thinking about that.
I
So
would
my
take it a
last question.
step. Oh, let me
Nope.
real
Go ahead.
quick. I
Yeah.
think I would take it another step. I agree with that analysis. I also find that institutions have this false sense that doing a micro entry to that receiving account absolves them of responsibility. But wait, Raylene, who set up the P2P, from a different IP address, by the way, when they set this up, they were able to confirm the receiving account got 34 cents. Therefore, Raylene must be involved. No, that does not mean so. And going back to circling back around those consumer protection laws, we have to remember that that's not sufficient evidence.
Right.
You
Exactly.
didn't confirm the ownership and signing authority of that receiving account to pull money from. So that'd be another thing I would consider too. Look at technologies that are going to do more than just confirm somebody has access to the account. We want to make sure that they have ownership and signing authority of that receiving account.
Yeah. So do you foresee NACHA getting involved and maybe implementing or changing some kind of rules that can help us as financial institutions decrease the risk of fraud?
Oh, absolutely. We've been seeing not to do that for about 10 years, real strong. We had the credit push guidance now. We've seen them put out various advisories and change rules or clarify rules in order to help both businesses and financial institutions reduce risk exposure. A lot of new rules that have gone into play, particularly in my opinion, for the last about 3-4 years, have in some capacity a risk management component or a fraud mitigation component to them, down to requiring certain, entries to have certain fields of information so that as the transaction flows, we have a better picture of why was this returned or what happened here in this case so that we have better communication as a whole. So I foresee a strong continuance of NACHA continuing to evaluate the industry and figure out what we can do a little differently in the network to help reduce some of the chance of fraud.
Great. Well, that's encouraging. Raylene, thank you for taking time with me today. I appreciate it. It was so nice to see you. It's been a long
Absolutely.
time since we've seen each other in real life. So thank you for taking time. I appreciate it. I
Have a
always
good
learn a
one.
lot when I have conversations with you.
Thank you.
Thank you.